All right, welcome to This Explainer. Today, we're tracing what is essentially the central nervous system of corporate finance. If you've ever wanted to map exactly how everyday operational workflows translate into high-level financial reporting, you are definitely in the right place. Let's just dive right into the architecture of the accounting document and workflow system.
Let's go ahead and bust a common myth right out of the gate, okay? Accounting, it's not just some retroactive data entry. The reality is, it operates as this super dynamic information processing system. Think of it like a massive assembly line, taking all these chaotic, real-world business activities and literally transforming them into high-value financial intelligence.
So, here's our roadmap for today. We're going to start at the Information Hub, look at the birth of a document, follow approvals and cash execution, trace verification and the ledger, move into closing and reporting, and finally wrap it all up with controls and ERP systems.
All right, Section 1, the Accounting Information Hub. Picture the accounting department as the central processing hub for the entire organization. It's like a factory where raw operational activities come in the front door, they get sorted and verified, and then they exit as this incredibly pristine financial data that leadership completely relies on to make their strategic decisions.
Moving on to Section 2, Birth of a Document. This is really where it all begins. You know, every single process ignites from a totally tangible event in one of 5 operational zones. Whether we're talking about a closed sales deal, a massive procurement order, a routine payroll run, buying a new asset, or even drawing down debt, that is the spark.
And that brings us to the absolute golden rule of this hub. It's simple. Without supporting documents, the transaction should not be recorded. I mean, whether it's a physical piece of paper or entirely digital, a document, like a warehouse receipt or a supplier invoice, is essentially the proof of life for any transaction. If there's no evidence to the system, it just didn't happen.
Let's put those first 3 steps in motion. An event occurs, source documents are generated as hard evidence, and then they hit the approval workflow. Because obviously, before a single set moves, management absolutely has to sign off.
Okay, Section 3. Approvals and cash execution.
Once everything is actually approved, those documents flow straight to specialized executors. Your cashier handles the physical receipts and disbursements, while Treasury, they step in to manage the broader digital transfers, foreign exchange, handling debt, things like that. And finally, the external bank processes the whole thing and kicks back statements as irrefutable confirmation that the job is done.
Next up, Section 4, verification and the ledger. Let's talk quality control.
Now, you might be wondering, what exactly must these accountants verify to act as the ultimate gatekeepers for a company's financial history? What are they actually looking for before anything gets recorded?
Well, they run 5 very strict checks. We're talking completeness of the documentation, mathematical accuracy, proper authorization, strict legal and tax compliance, and of course, correct account classification. A transaction literally has to pass all 5 of these to pass through the gates. No exceptions.
So once it's fully verified, every transaction needs a permanent home, right? That is the general ledger. It serves as the grand central station of the whole system, the ultimate final destination for absolutely all verified records in our hub.
But actually, before hitting that general ledger, data usually filters through what we call subsidiary ledgers. Think of these as highly specialized sorting machines for really granular balances, like individual customer accounts or specific suppliers, which then roll up and summarize perfectly into those big master accounts of the general ledger.
All right, Section 5, closing, reporting, and insights.
Now we're at the back end of the workflow. Verification and recording lead straight into reconciliation and closing. And this is that absolutely critical month-end process where internal ledgers are carefully matched up against physical reality. Getting that right unlocks the final step, financial and management reporting.
And this is the magic, right here. This is how mundane, everyday source documents transform into highly actionable insights. Stacks of boring invoices suddenly become this gorgeous, comprehensive revenue analysis, broken down by product, customer, and region. This is exactly the kind of financial intelligence leadership needs to drive future strategy.
Finally, Section 6, controls and ERP systems, the modern machinery. Look, to prevent fraud and avoid incredibly costly errors, businesses have to rely on internal control checkpoints. These are basically the safety guards on our assembly line.
Take segregation of duties. It just makes sure the person requesting a payment isn't the same person who gets to approve it. Or three-way matching, which is a great specific example. It ensures your original purchase order, the physical goods receipt note from the warehouse, and the final supplier invoice all match perfectly before anyone pays a vendor. It essentially guarantees no single person controls a whole transaction from start to finish.
And today, instead of just pushing paper around an office, modern ERP platforms automatically integrate this entire ecosystem. By seamlessly connecting the warehouse with treasury and accounting, these systems drastically cut down on manual data entry and instantly enforce all those critical internal controls we just talked about. Ultimately, organizations that take the time to design a truly robust document workflow system, they benefit from way stronger internal controls and far higher confidence in their financial statements. It is not just about keeping the books tidy, you guys. It's about fundamentally protecting the business and having unwavering, absolute trust in your data. So, I want to leave you with this to ponder. Based on everything we've unpacked today, how robust is the document workflow operating behind the scenes at your own organization? Seriously, are there skipped approvals, loose controls? I really encourage you to look at your company's assembly line with a brand new perspective. Thanks so much for joining me on this explainer, and keep learning out there.